I hope everyone is adjusting to the time change as we moved our clocks forward 1 hour. Here in Arizona, we didn't, but the rest of the country did. And today marked the 25th anniversary of the dot-com crash, March 10th, 2000. I remember it well. It's like when all the psychology changed from, everything's going to go up forever till, wow, something's really different this time. I remember that day distinctly. And you just knew that it was over. And it's kind of like the January 27th day with the deep seek, that whack day when I don't know, deep seek came in. What it was the 27th. How much was the Nasdaq down that day? The Nasdaq was down. It was a Monday. It was down 3%, but a lot of those stocks that were tied to the data center or the energy, the artificial intelligence plays, they really got whacked 25, 30%, and they've never recovered. I'm going to get there in a minute. I just want to point out today the Nasdaq was down 727 points or 4%, and with 10% above the average daily volume. So whenever, the Nasdaq is down that much, you can consider your growth stocks down 8 to 10% or more. And that's just the way it works. It cuts both ways. On the upside, those growth stocks really appreciate more than the index and they accelerate to the downside more than the index. But we know when the Nasdaq is down like that, those big Mag 7 tech stocks are driving the index both in both directions. I just want to point out one more time. I showed you over the weekend about what, a bear market looks like. And because, it looks like we're starting a bear market here. You have these high here and then a sell-off and then a rally, weaker rally to a lower high. And then you slice the 50 and then you slice the 200 and you stay below the 200. And in this case, take a good look at this chart here, folks, because it's very similar. You fast forward a year and you could see, that the Nasdaq was below this black line, this descending 200 simple moving average for 11 months, which is, a long time to be in a bear market, if you're trying to make money on the long side for sure. So now here we are today. We've made a series of these lower highs as the market tried to rally but could not make a new high, sliced the 50, now sliced the 200. And now this is the sixth consecutive day where it's traded below the 200. And you can see the shorter term moving averages, the 10, the 21, and the 50 curling lower. And yeah, it just does not, it doesn't look good. I mean, I can't spin a positive picture here for the longs. If you're on the short side, you're thinking, wow, if it rallies back up to the 200 and fails there, that would be a great time to short below the 200. And it looked like, if that happens, then we're probably going to have a prolonged period of, trading below the 200. I was expecting the index it had this day on Friday. I was hoping, expecting it to rally back through the 200, but it couldn't do it. And I look back to the prior Friday, which is February 28th here, and it traded down to its 21. Excuse me. It traded down to its 200 on that Friday and bounced hard. And so I thought, well, maybe that textbook move down to the 200 and the bounce, But what happened when we come in on Monday? Guess what? It was down below the 200 Tuesday, Wednesday, Thursday, Friday. We get another bounce, and you think, oh man, it's going to rally back through, but nope, just more selling. So it's clearly in a downtrend. You can't fight this. I know people are thinking like, well, I own Tesla and it's going to return, and I own Apple and it's going to return. It's not. It's not, folks. They're not going to. Like I had mentioned, well, I might as well get right to it. Tesla. This one, yeah, this is obviously in a downtrend. There's a rule here of former leaders, 80% of them go down 50% and 50% of them go down 80%. And right now, this thing's down, 55%. One of our clients here today, subscribers, had it reminded me, that there's a TSLQ, which is an inverse ETF that you can trade. I'd forgot all about it. Actually, I was more into shorting the stock, in the conventional method. But Yeah, this thing is down 31, well, excuse me, this one is up 31% because it's the inverse of the Nasdaq excuse me, inverse of Tesla. So when Tesla goes down, this goes up. Same with NVDA. NVIDIA was down today, 5%. So the NVDQ and the TSLQ, they were, this one was up 10%. You can see Tesla was up like 31%. So just another way to, play you go long on the short inverses, two times short. This is Apple today, sliced its 200 down nearly 5%. So the Mag 7 stocks are, I haven't been covering lately because I'm not interested in these because they're not going to, be grand slams for me. And right now, nothing is pretty much. But yeah, Google slicing, below the 200 here. And that's what I mean. Slice at 200, then it rallies up 3 or 4 days, and then gets slammed down. And that's what I'm looking for if the Nasdaq does that. Yeah, that's when you want to short. You don't want to short when they're down. You want to short when they rally up weekly to a moving average and then get pushed down. All right. I had mentioned that the former leaders of prior rallies, they go 50% of them go down 80%, 80% go down 50, 80% go down 50%. This one's down 55% already. App Lovin. Palantir, I'm not sure. This is a former leader. Yeah, it's only down 39%. Snowflake, down 24%, not bad. VST, I wouldn't call Snowflake a leader anyways. VST, these things got hit with the whack day though, on the 27th. Yeah, down 28% on that day, and just continuing lower, showing, signs of weakness. CEG on the whack day got hit 21%, rallied back up, couldn't make a new high, and now is just completely fallen out. And then VRT, Vertiv, these AI energy and data center plays are just being crushed. This one, oh man, $78 off of 155. So it's down 50%. Former leader down 50% already. It just seems like the Nasdaq is starting to get momentum to the downside, and these things are off 50%. So a couple other ones, Reddit was a big, yeah, this one's down 53%. A Lab, it was an IPO with a big move down 58%. Kava, this is an IPO that, yeah, now it's down 53%. So you can see a lot of the damage in these leaders, and I'm going to stop there because it's just, it's repetitive, it's negative, and it's not going to do any good. I'm not interested in those stocks. Okay, what's happening here with the U.S. markets is money is coming out of the markets for sure in the United States. We saw rotation within the U.S. markets from sector to sector to sector during that bull run, but now we're seeing money come out of the U.S. markets and into the European markets. This is TIGO, Millicom, International Cellular. TIGO. Yeah, I mean, up when the Nasdaq's down 4%, as things up. I mean, that's showing a relative strength, still trading around, a standard buy point, although, breakouts aren't really working in this tape at all. I mean, yeah, nothing's working except for shorts. When the Nasdaq's down like 4%, you could bet, 9 out of 10 stocks are down. If you own five stocks, probably good chance that four of them are lower, probably all five. Sanofi, the drug stock, France, up barely, call it flat, but flat in this type of a take is a big win. GlaxoSmithKline, GSK, yeah, this is a big win when you're up, 2/3% in this tape. I mean, yeah, that's not bad. That's a big win. If you're holding it, you're thinking that's showing relative strength, right? I mean, I could live with that. I can't live with these stocks that are going down, 20% in a day. So, all right. Couple other, Europe is strong. Some of the insurance names did okay. I mean, nothing's going great guns here, but I mean, if you're just flat, that's good. This one pulled back to its 10 EMA and bounce. This is Brown and Brown. Not bad. I mean, Progressive was up earlier in the day. I think it made a new high and then pulled back down nearly 0.5%. Not bad. Aflac and Allstate. Not Foot Locker. Oh, good Lord. Um, yeah, Aflac, not bad. And then Allstate, another insurance company. I mean, when you have utilities and insurance companies that are doing well, there's a couple of utilities I was watching. This is a Con Edison, up, yeah, 2%. And then WEC continues to make new highs. That's very defensive in nature and just flight to, defense, really safety in the utilities group, but utilities were kind of up today. And also, another defensive group is the food group because it's an essential, right? You have to, people are going to eat food. I mean, even in the worst of times, right? Um, this one made a new high today and closed flat. General Mills, another food stock, showing strength today. People are going to eat, right? Not something I'm interested in, but just kind of showing you. In Kroger, good thing they didn't. Dr. No prevented the Albertsons Kroger deal, and it turned out to be a good move for Kroger. This thing made a new high today, up 1.5% in a week tape. And also the drug stocks. I pointed out many times recently, Gilead is just on a tear. Made another new high today. That one looks strong. VRTX, Vertex, drug stock showing strength here in a weak tape. VKTX, this one has been really weak, but with the data from Novo today, this one's still down 4%. Gee, Manise, holy moly. You would think that would be doing well because Novo had a readout today and it didn't go well, down nearly 10% for Novo. A couple of the other drug names, Bristol Myers, up, yeah, man, breaking out. Bristol Myers up 3.3%. You can't ignore that. I mean, I know they pay a nice dividend, but I mean, if you look at breaking out above that level, but if you look at it from a longer period of, yeah, this thing has gone nowhere for 25 years. But it does pay a dividend. And the one stock I had on the ready list last week that I like, that the only stock that I'm owning right now is TGTX. Just kind of, probably some short sellers covering their bets after that report last week. You can see on the weekly chart. It was up, I think 28% last week as it's trying to break out of this consolidation period here. Yeah, it was up almost 28% and then rallied 2% today, which is phenomenal in a tape like this. Really sticking out like a sore thumb. Some of the relative strength here, but it is a tough tape. No way to sugarcoat any of this stuff. Some of the oil and gas names, I wouldn't say they're showing relative strength. They were up today slightly. This is EQT. I think natural gas was up quite a bit. This is a natural gas component. Same with Antero. Yeah, this is not relative strength. It's just bouncing off its 200, up 3% in a week tape. Anyway, that's it for me today. There's there's no way to sugarcoat this. The markets are weak. The administration wants, lower interest rates. They're going to do anything they can to get them. So it's going to be at the, like I always say, when politics and my investments meet, my investments lose, and politics always win. So nothing's changed there. But maybe we'll get lower interest rates later on. All right, that's it for me. Thank you for watching. Except for in honor of the great Steve Jobs, I have one more thing. We had some earnings reports tonight. This is a really bad time to be reporting earnings, but Oracle's up 3% after hours. We'll take it. Yeah, we'll take it, right? I'm really surprised anybody reporting today that it's going higher, but maybe we get a little relief rally, a little bit. I mean, it's been down so much that you would think at some point the shorts would cover and you get some sort of a bounce. Um, Asana reported tonight, and their CEO, Dustin Moskovitz, has decided to step down after spending a gazillion dollars on this stock. He was buying it, right before the bear market here, buying it all the way down, which is a cardinal sin, something you don't want to do. I mean, he can afford the losses, but still, I mean, that's no way to be. And it's down 25% on their earnings report where I think they guided lower in revenues, was the deal there. PAY reported tonight, did not see any data. I'll have some in the morning. It's up 6% though, so we'll take that. Vail, which is the ski resort, operates 42 ski resorts in Colorado, Utah, California, Minnesota, and Australia, up 4%. I'll have more in the morning on that report. And then RDW, this is the like the software for, space exploration, I believe, and down 17% after hours. So, like I said, I'll have more in the morning on some of these earnings reports and then tomorrow's earnings reports. But yeah, at this point, you don't want to be that person to say, my stock's coming back. I own this stock. I have total conviction in it. It's coming back because I could tell you that stocks that correct more than 40% and form a base, very few of them have a successful breakout. And stocks are down 50%, are part of the they turn into the part of the former leader pack. And Tesla's certainly one of them. I believe App 11 is done too. Don't hold on to this thing thinking that it's just going to bounce and come back. Down 55%, way too much pain. These things are I don't want to be fatalistic and say they're not coming back, but don't hold on and hope. Hope is not a strategy. You can see this is going straight down. It's not doing this anymore. Okay. This is when folks were buying. Now you can see these big pink bars that people are selling. So do not hold on and hope. Do not do that. Your money is way too valuable. My money is way too valuable. You cannot sit there and hold on to stocks. I'm sorry and say, "Oh man, this is a great stock before. It's going to win for me again." Well, probably not. I mean, NVIDIA too. Just looks like these are starting stage four decline. So there's not a lot of stocks to own right now, and that's what happens, in a bear market. I'm not saying we're in a bear market, but it's acting like it wants to start a bear market. I just showed you the Nasdaq down 6 days in a row below the 200. That's how bear markets start. So do not hold on to Vertiv and think that it's coming back. It had a great run. Sometimes you just got to say, goodbye. Yeah, that was a great run. Just like we held Elf for a while, and then Elf had a great run, and then it died, right? And Abercrombie and Fitch had a great run, and it died. And Kava had a great run, and it died. This is what happens to growth stocks. Celsius had a great run, and it died. So don't be hanging on and hoping, because hope is not a strategy. And I guarantee you that most of your 90% of your recent buys, you're underwater on them if you're on the long side, because that's just the way it works in a downtrending market like we have right now. Those stocks are going to follow the index, and that's just the rules of combat here. And get in your bunker, put on your hard hat, save your cash for a better time because when the market is doing this, yeah, we're going to step on the gas and make a ton of money. When it's doing that, we're out. This, step on the gas. This, we're out. Oh, I didn't mention this. This is a 15% correction already from the peak of 20,204 to today's low. I forgot to mention that. If not that it matters, it's good cocktail information. The peak 20,204 to the trough today of 17,291. It's roughly 15%, a little tick below 15%, but that is good cocktail information. You can impress your friends at the party tonight. Anyway, that's it for me. Thank you for watching at mcstockcharts.com. We never give up.